Welcome to tonight's live online webinar. My name is Darren Wagner. I'm the founder of Morpheus Trading Group, and I'm also a professional hedge fund trader and the author of several trading books. Tonight we're going to be talking about where is the stock market headed next. Now obviously if we knew that with any type of certainty, we'd all be gazillionaires, but technical analysis gives us a slight edge, just a slight enough edge to be better than 50%, and that's beyond that. Firm trade management, such as cutting our losses quickly and letting our winners ride, is what enables us to be consistently profitable, which over the past 10 years, you can see our performance on our website. We've outperformed the broad market. So we're not, we're not prophets. We're not going to say the market's definitely going to go here, it's definitely going to go there. But what we're going to do instead this evening is just take an objective look at the chart patterns and see what they're telling us, because past patterns tend to repeat themselves, because technical analysis is nothing more than a way of charting the human emotions of fear, greed, hope, and regret, which is what drives every market in the world. So the broad market in the US is at an interesting point because we've broken out above key resistance from October of last year, but now we must contend with the 52-week highs from the summer of last year. So it's really a critical point in the market here. And we're going to look at the charts of the broad market and give our thoughts as to what we think might be happening, not only in the near term, but in the next several months as well. And then we're going to go over some individual stock and ETF patterns that we like for potential entry for swing trade in the coming days as well. The whole webinar will last about 30 to 45 minutes, and then we'll have time for Q&A, questions and answers thereafter. So if anybody has any questions at all, just save them for the end, and then we'll be more than happy to answer all your questions. So joining us this evening, we have Ed Bailog and Rick Petrocelli. Those of you who are already members of Morpheus Trading Group, you probably recognize their names. Ed actually assists with writing the Wagner Daily, the ETF newsletter, and he also runs the live ETF trading room every morning. And Rick Petrocelli is in charge of the MTG Stalk Sheet, and he actually runs the stock trading room that we have every morning. So both of them have been with me for many years. They're my right-hand men, and they know the strategy very well. In fact, Ed is the co-author of my new book, which is now available for pre-sale on Amazon.com, coming out later this year. It's a part 2 of my first ETF book. So Ed's going to be doing the broad market analysis, and Rick's going to be looking at the individual stock plays with you. So I'm going to go ahead at this time and turn things over to Ed.
Yeah, the theme tonight for the webinar was, where's the market headed next? Where are we going? Where's this thing headed? So what I've done is I've prepared some weekly charts of the 3 major indices, the S&P, the NASDAQ, and the Dow. What I want to do is just sort of give you our analysis, our technical analysis on where we think the market's headed. Now, Darren had mentioned that we have the swing highs. If we go back to last summer, that's this swing high right here, the one I'm circling. In fact, let's do it this way. And actually, it was in last spring. It was spring and summer of last year. That's that swing high right here. And as you can see, if we zoom in, we're right within striking distance of these highs. Now, what's important is, and the reason I have the weekly chart up, is if you go from the lows in March of 2009 all the way up to where we broke the downtrend, or I'm sorry, where we broke the uptrend, back in August, September, July, and August of last year, you'll notice that that former uptrend line would now serve as resistance, and that happens to correspond right with this swing high. So what we expect, I mean, what I anticipate, or at least the way I'm viewing the market, is that we're going to see a continued rally here for a while. And when we get into this resistance range, when we start banging into these highs, we've got to be careful on the long side of the market. It certainly doesn't mean that we would take on a bearish view of the market. That would be ridiculous. Right now, we're trending higher, and we have a bullish view of the market. But when we get to these highs, I would anticipate that we're going to get an overcut of this swing high. And with that overcut, we're going to see what the market is made of. When we overcut that high, do we Do we sell off and consolidate and look to make another move higher? Or overcut this high, does the market reverse sharply, and do we come back down into some of these big moving averages? That's really, the big question, and there's no way to know that until it occurs. However, you've got to look sort of into the crystal ball and get an idea and sort of visualize what can happen in the market, what might happen, so that you're trading in an intelligent manner. Certainly, it's probably unlikely that you would be backing the truck up on the long side once the market reaches this pivot. But once again, you don't know until the conditions are there. But it's something you have to have in the back of your mind. Now, if we look at go to the COMPX, we're going to see the same type of pattern activity. The only difference is now the NASDAQ is actually, this will be, if it holds up here, this will be our third test of this swing high. So we had, we broke down from it here. Then we had the test in the past summer, and now we're heading there now. So is the third time the charm? Once again, you don't know until it happens, but it's certainly a critical point of reflection for the market. And, it has to be treated with some respect here. And once again, you have this long-term uptrend line that we're going to be coming into. So I certainly expect some resistance. Noteworthy is that volume was much higher during this leg up and during this leg up. If you notice right now on this move, volume has been drying up some, and it's noteworthy, but it's not everything. I mean, it's something you have to be aware of. There's other factors that play a role, but you have to be aware that we really haven't seen a big volume move here, and it'll be hard to get through this swing high unless we get a pop of volume, because that's gonna pose some serious resistance, because that's when the carnage started going back several years ago, back in 07 and 08. This is where the market collapsed. So there's going to be some memories there, and there's going to be, in all likelihood, some stiff resistance to get through. Now, once again, you don't anticipate these things. I'm not going to trade based upon it. You trade in the moment. We're swing traders. We trade in a short time frame. We're providing a longer term perspective here. Now, if we go to the Dow, I mean, one of these charts looks like the other. I mean, they all pretty much are showing the same characteristics. And the Dow actually is the index that's the closest to this swing high from last summer. I mean, we're within just a few points. And of course, the big breakdown level was at the 13,000 mark, is when the Dow really cracked, going back to 2007, 2008 is where the big crack came. So, I think we're reaching the latter part of this current thrust up in the market. This move that we're seeing here, we're getting close to the end of it. It could be a couple of weeks, it could be a week, it could be 2 weeks, it might be a month. It just, depends on how, the market interprets everything. But certainly, I don't expect us to necessarily just blow through this level. I would expect there to be some test of this resistance level and a pullback, and then it comes down to how big is that pullback. Now, switching gears for a moment, let's just take a look at a few things that we've been in recently. In fact, some trades that we're in now. We got in IYR a few days ago, and let me pull up the weekly or the daily chart of this. We entered IYR when it gapped up on the, I believe that was the 17th. Yeah, on the 17th, it gapped up. It was consolidating. We had some sideways action here. We consolidated along the 200 period moving average. We had an undercut, and the next day we gapped up. This undercut, we look for these a lot. These undercuts serve to sweep stops and to shake weak hands out of the ETF. We gap up, and since then we've moved higher, and IYR is showing enormous relative strength over the past 3 or 4 sessions, because when the market was sort of chopping around and pulling back a little bit, IYR continued to move higher each day. So it's looking pretty good, and we anticipate price target somewhere around, between like $61 and $62, somewhere in the range. IYT is another one that's really acted well in the past 2 days, a lot of relative strength. And it was a similar type setup. We got it on the 1st of January, or the 3rd of January, same thing, into a gap up. And now, we're just seeing it. It's been riding along this 20-period moving average, this dotted line right here, now for several weeks, for a good month and a half. So with this explosive move today, the pickup in volume, we fully expect this to break above that 5-day high, and I could see IYT coming back up into this swing high somewhere in the $97 to $100 range. But basically we look for stocks, and in this case ETFs, that are showing relative strength versus ones that are lagging the market. So if you notice, everything we're in, most of the things we're in, these two at least, were above their 200-period moving averages, and they have an uptrending 20 and 50-period moving average. The dotted line is the 20-period exponential, and the blue line right here is the 50-period moving average, and then so we're looking things that are consolidating at or above these key moving averages, and then we look for breakout moves. And I guess the motto is buy high and sell higher. We are trend traders, and we trade with relative strength, and we look to trade the strongest ETF, strongest sectors that are going higher. And on the short side of the market, we look to trade the weakest ETFs and the weakest sectors, and when the market's moving lower. So this gives you sort of a flavor of what we do. And just a quick look here. The positions here that we call in the newsletter here, these are the ETF positions. These are just marker positions. I'm only showing 100 shares because I trade them in a different account. But you'll notice that these are the long positions we have in the stock newsletter, and the long positions in the ETF newsletter. So we're up pretty substantially recently in our, and it's based upon our trading method and our technical analysis of market conditions and staying with the trend. Don't fight the market. And we did have a clue recently that this market was likely to break out pretty strongly here soon, and that was, everybody's been talking about the market needs a pullback. The market needs a pullback. Well, I can tell you historically, talking about something like that, that's exactly when it doesn't happen. And usually the first surprise move you get that goes higher or lower, depending on what side of the market you're on, is when everybody is talking about, oh, we've got to get a bounce here, and then it goes lower, or we have to have a pullback here, and then it goes higher. Certainly there'll be a pullback, but the market showed no signs today that it was ready to pull back, and fighting the trend is a full. So anyway, hopefully that gives everybody some insight on how we plan things out, what we're seeing. And what we're going to be hoping for is that in the next week or so, next several days to week, that we're going to be getting out of most of our long trades and looking for new setups, because I would say right around now is when everyone's going to start jumping in. The late to the party Charlies, the late to the crowd guys that jump in now, they're a little later than they should be, and it'll fuel this market for a little while longer. But I think about a week from now or so, it's going to be a little more dangerous to be trying to get long without having new setups. But anyway, that's all I have to say for this evening, and there'll be questions fielded a little bit later here. Darren, I'm going to turn it back over to you.
Good information there. In terms of the broad market analysis that Ed went over with you, you noticed that first of all he went over the daily chart, which is the standard time frame that we use for most of our analysis for our swing trades. But then he went to the longer term weekly chart. It's very important in your trading to have a multiple time frame view because it enables you to see the big picture. Sometimes, for example, in choppy market conditions, the daily chart may not indicate any type of trend, but if you look at the weekly chart, where each candlestick bar is 1 week of price action, it eliminates some of the noise and kind of gives you a better idea of where the big picture is. So, for example, what Ed showed you was on the daily charts, we're definitely in a steady uptrend on the S&P, NASDAQ, and Dow. But on the weekly charts, we're about ready to run into some major horizontal price resistance with the Dow leading the way, and that could be potentially a turning point in the market. As Ed mentioned, we follow the trend. So as long as the trend remains up, we're going to remain positioned on the long side of the market, that's pretty simple. We're trend traders, but the important thing to know, though, is that when you encounter major resistance levels, it's good to be more careful with both in terms of number of positions you enter and in terms of your share size as well, because the reversals often come when the least number of people expect them, is when the sharp reversals come. So, if conditions happen to change in a month or two, we'll definitely be ready. We profit on the short side just as well as we profit on the long side. In fact, last September was one of our best months ever in our newsletter, made about 10%, and that was a month when the market was down 8%. So we don't care which way the market goes, up or down or even sideways, because we're trend traders, and we simply use relative strength and relative weakness and can profit on both sides of the market. But for long-term investors, where you only can be long, then it's important to know where the trend is. So good analysis there, and Ed also showed you our positions that we're in our newsletter, Wagner Daily. We're in several winning trades that are looking really good right now. And as Ed mentioned, we're going to look to sell those into strength and then, re-enter on a pullback once the market eventually pulls back, because it will eventually do that. So next, I'm going to turn things over to Rick Petrocelli. As I mentioned, Rick is the person who writes the stock sheet every day, which is our individual stocks. And he's been with me since day one, since 2002. He's been with the company. He obviously knows my trading strategy very well, and he's helped refine it a lot as well.
To the stocks we go. At Morpheus Trading, we basically run a short-term swing trading system on the stock side that we really focus on the small to mid-cap growth stocks. And while we definitely do look for earnings momentum, and earnings and revenue momentum, we certainly don't mind if a stock doesn't have any earnings at all and has a high relative strength number. So basically, all of our setups are coming from stocks that have an IBD relative strength ranking of greater than 90. Just to give you guys an idea of what we do, most of our setups are in stocks that are trading within 10 to 15% of the 52-week high. And although we buy breakouts, we try to have what we have is an early entry breakout system, which identifies breakouts most of the time, not all the time, before the crowd gets in at the real obvious breakout point. So that's the one advantage to the system we run, that we've refined the entry points over the years to be a little bit more, not so obvious, and it helps us to get in a little bit early and keep the stops tighter. And that helps us overall with our reward to risk management. So current open positions, as you see here on the right hand side, we have 9 open positions, all but one are showing a profit. Where our 2 top positions right now open are SCSS Select Comfort, which we did buy at a rather obvious point on 1-3, and we remain long out, and it broke out today. And we're looking for another 2 to 3 day pop, so we can sell for about anywhere from like a 15 to 20% gain, depending on how strong the price action is. And as you see here, SCSS is at new highs. The 200-day MA is sloping higher, as is the 50, and the 20-day MA is above the 50. And so it's in a well-defined uptrend, and we're not doing anything fancy here, just buying strength. Same can be said for Endologics. Quite a run up here. It's already doubled in price from the last breakout at $7 to almost double to 12. So these stocks are up quite a bit before we get them, and it doesn't really matter because they go higher as long as the market's healthy. So in EGLX, we did get a bit of a earlier entry. So the obvious breakout point could have been somewhere around the 1180 level. We did get in over this 2-day high, and we remain long right now with a 10% profit, and we'd also look to take profits on this move up. Most of the setups we take, we look for one move up and then we hold through a short-term pullback, and then we sell on the next move up. That's most of the time. Sometimes though, on the beginning of a new rally, we might just take profits wave up just so that gains in our trading get off on the right foot. And so NSR we're only up about 3%. This was another rather obvious breakout entry here on 1.6, but so far so good with most of these positions. ASGN, we got a really nice entry at 1155 right here, and the price action took off and beyond our breakout entry and is kind of just chopped around today, and so we'll look for follow through over the next few days. But you know, so far so good on our open positions. As far as recently closed positions, we've had a few stop outs around 2%. I think 2 stop outs around 2%, and we've had some decent winners on the long side. SIMO, which was a really good entry for us. We got in SIMO with our early entry pivot. We held on to SIMO for about 2.5 weeks, 3 weeks, and we sold SIMO into strength on 1.9 at 22.59 for an 11.6% gain. See, it hasn't really gone much of anywhere since we exited. It's just spacing out once again. RGR is another setup that we took back on 1.5, and we sold in the second wave up on a big move up into. On a big day up, we took the profits near the day's high. We looked out there and got a 11.7% gain, and basically the price action hasn't extended much beyond our sell. And in NUAN, we had a really good entry here at 26.17, and here the 200-day MA is sloping higher, as you can see. The 50 MA is sloping higher. So this is all, you know, this is at new highs. It's all momentum based. So setting higher lows here. NUAN breaks out. We got in the following day on 1.5, and on this setup we didn't hold for a pullback. We just took the quick 12 to 13% gain here, and we sold at 29.38 on 117. So that turned out to be a decent sell as the price action pulled right back. And HMSY, we identified an early breakout entry on 1.9, and we held for just the first move out and sold again, a lucky sell on 119 near the highs of that day before it reversed lower. And with HMSY for potential setups, this is a good segue. What we see on the horizon, I mean, I'm watching HMSY for the price action to settle here at the 20, and then we might be able to get in over the prior day's high, or we'll see what develops over the next 2 days. This is the first pullback to the 20-day EMA after a breakout, so that's usually a good spot to do some low-risk buying. We're also looking at AKRX. I can't give you the exact entry point because I want to be fair to our subscriber base, so this is the obvious breakout here around 1170. It's a fairly tight situation. The longer it consolidates in between these 2 points, these 2 trend lines, the better off it will be. IACI looking pretty good for an entry over this downtrend line. As you can see, the price has tightened up nicely since October. GNC is a IPO, a recent IPO. I believe it's it's from IPO'd from April of last year. I'm sorry. So it's consolidating at the highs. Another week or two of sideways action. It could be viable on a breakout to new highs. And what else we have here? We have HSTM, another potential breakout entry above 19. This is one we'd also might be able to have identify an early entry pivot. And I guess that's about it. And there's Halo pulling back to the 20-day EMA. I'd like to see 1 or 2 more days of sideways action before we hop on board. But if Halo does climb above 1050, it could resume its uptrend and push higher. That's it for me, Darren.
You probably noticed a common theme here that all the open positions that we're currently in and the trades are recently closed, did you notice that they have one thing in common? They're all in a steady uptrend. So that's because the market's in an uptrend. We're trend traders, so we simply look to find stocks that are outperforming the market, stocks that are moving higher as the market moves sideways. Those are typically the first ones to surge higher when the market moves higher as well. And the other important takeaway here from the charts that Rick showed you is that we're not ever looking to catch the bottom, nor do we look to sell at the top. Now, in a couple examples, we did get lucky and happened to sell at the top before the pullback, but typically we're just looking to take the bulk of the meat of the move out of the middle. And like Rick said, generally hold 2 to 3 weeks, catch the first move out, wait for a little pullback, another move higher, and then sell. And then oftentimes, the stocks that we sell for a gain, we look to re-enter, such as HMSY that he showed you. If HMSY now has pulled back to the 20-day MA, if that sets up again, we can look to re-enter, but we'll be getting back in at a lower price than where we sold. But often the leaders of the stock market, the strongest stocks in the market, stay that way for months and months at a time. So we'll often trade the same stocks over and over, but there's less risk to buy and sell the moves, the momentum-based moves, rather than just sitting and buying and holding, or buying and investing, I guess you'd call it. Looking at the chart that's on the screen right now, Halo, the 20-day exponential moving average is the beige line. Notice how ever since the stock gapped up in mid-October, every time it's pulled back or moved sideways, the 20-period exponential moving average has acted perfectly as support. And it undercuts intraday for 1 or 2 days and then moves back higher. And that's what you'll find with strong stocks, is that typically that 20-period exponential moving average acts as support, and every pullback to that level presents a low-risk buying opportunity. In the case of Halo, we waited for the pullback and then the breakout above the range. So that's really all that's to it. We do have a consistently profitable track record, but it's really just by following a very simple strategy. It's not rocket science what we do. First of all, we're excited about this. This is our new blog. We've actually been running Morpheus Trading, which is this site here, for 10 years now. But believe it or not, we just recently launched a blog. So I guess we're better late than never. But we're one of the first companies to provide stock picks on the internet through our website, and kind of joined the blog party a little bit late. But anyway, if you haven't seen our new blog yet, please check it out. You can see the URL here. I'll also type it for you. There's good material on here, and so if you might want to bookmark this site. The blog is obviously free. We will be every day updating it and adding new content. There's a lot of categories. We have actual past trades, which will be things such as we had a 12% gain on NUANs recently. So we give an educational analysis of the trade, where we bought, where we sold, why we bought there, why we sold there. We also have educational articles we'll be adding. We recently posted an article on how we manage opening gaps in the market. And then we also have a list of hot stocks and ETFs that we're watching, that we're monitoring. Actually, just today, Rick posted about the pullback setup for HMSY, which we just went over for you in the webinar here. So that's, we're showing that as a potential buy entry. And also every day, a lot of our members like this, every day we do a stock pick video, which is posted on YouTube, and we link to it on our blog, where we use the new Morpheus stock screener to find the best setups based on the strategy that we've been talking about, and then we give those in a 3-4 minute video. So a lot of great material on our new blog, and we'll be adding books and resources available. And you're more than welcome to come on over, share some comments. We'll get some interaction going. If you haven't seen this yet, you click on our swing trading strategy. There's a 9-minute video here that really clearly explains the types of trade setups that we take in more detail, kind of like we went over tonight in the webinar. So do check that out. I think you'll find that to be very valuable in your trading education. The other thing is, obviously, our main website is morpheustrading.com. We've got some new videos on here, such as how you can earn a fully invested return. We've been tracking our performance for the past 10 years. But we only we're very conservative. So with our model account, we've only been using about a quarter of the buying power. So those who wanted to use more exposure and buying power can actually do so. And it works out to be about a 56% annualized return that we've earned over the past 10 years with a fully invested return. This video talks about that. And for those of you who like the stock picks and that you saw there, and if you want to participate in that and be part of our next winners, on the MorpheusTrading.com, click on the Services tab. And on the Services tab, you will see we have a couple different services. The Wagner Daily, if you click on More, you get details there. This is our ETF newsletter, and the MTG Stock Sheet is for our individual stocks. And the Portfolio Tracker is our longer-term newsletter. And you can do monthly, quarterly, or annual subscriptions, but most of our subscribers go with the combo packages because you get all three services and you get a much greater discount. This actually includes access to our live trading room that I told you about as well. And twice a week you also get access to our live Q&A webinars as well. So if you want to participate in the trades, I mean, on our blog we give you general trade ideas, but we don't give specific entry points or exit points. Whereas with our paid subscriptions, we do give specific entry and exit prices, and we do so with real-time alerts as well to your email and your cell phone. And then one last thing, and then we'll jump into questions and answers. We sent out an email you probably received on Monday about a promotion we're having for a video course. And that video course ends, this promotion ends tonight at midnight. Your local time, it ends at midnight, so in just a couple hours. If you haven't taken advantage of it yet, you might want to do so. On dragoncharts.com, this is actually the sister company of Morpheus Trading, and I put the URL for you there. This is the sister company, and this is the education arm of Morpheus Trading. And we've produced a course, which is a result of 10 years experience. It's a video course, 8 parts. This is a top-notch professional level course. I guarantee you won't be disappointed with it. It goes into all the details of not only when we buy and when we sell, but often overlooked items such as how to manage money, the psychology of trading, overview of the technical analysis. So all the things you need to know to be, whether you're a brand new trader or if you're an advanced trader and just want to refine your strategy, you can benefit from this course. The course is normally $395, and that enables you to review the course as many times as you want. You own the material once you get it. Comes with a workbook. But until tonight at midnight, this course is actually 50% off. So I'll type that in, 50% off the video course until midnight tonight. And you need to put in, when you click on the box here with the credit card logo, you'll see it says promo code. You need to type in this promo code, MTG 2012. That's the promo code for those of you who wish to take advantage of this course for half price. So that's the last thing I want to show you. So that being said, we do have some time now for questions and answers. We've got about 15-20 minutes. So if you have any questions at all, go ahead and just type them in the chat box, and we'll answer your questions in order order received.